Hello, I'm Ken Carpenter, and this is Invest AI Savvy, where AI powers smart investing. Happy Thursday, April 23rd, 2026. Today's signal of the day is Riot, RIOT, a mid cap equity trading around $18.48. Before we get into the signal, a quick word. BuzzPulse is a social intelligence tool. Everything you hear today is commentary and data, not investment advice. I'm not your financial advisor, so please do your own research before putting money anywhere. Now, Riot is Riot Platforms, a Bitcoin miner that just passed 10 independent quality gates inside our convergence engine. Now, here's exactly what fired. BuzzPulse BuzzSurge Z-Score of 5.1, meaning social attention, is more than 5 standard deviations above normal baseline levels. Momentum confirmed independently. Sentiment is at plus 0.39, moderately bullish, but somewhere near euphoric territory. Short interest sits at 14% of float, not a true squeeze setup, but enough dry powder to add fuel if this thing runs. And here's the ticker. IV rank is 2%. Options are historically cheap. When implied volatility sits in the second percentile of its annual range, and we're simultaneously seeing unusual options activity that confirms the directional bias, that's what an asymmetric setup looks like. You're buying lottery tickets at a discount while social attention is spiking. The convergence depth here is 10 signals. BuzzPulse surge detection, confirmed momentum, sentiment analysis, options pricing dislocation, and flow confirmation, all pointing the same direction at the same time. That's not noise, that's a signal. Now, let's talk about why Riot is catching this wave right now, because the macro backdrop is the story. Bitcoin is trading near $78,000. Bitcoin dominance sit at roughly 60%, with money quietly starting to rotate into riskier crypto plays, and the miners getting leveraged beta to that move. Sentiment on Bitcoin right now is 80% bullish, according to Lunar Crush, with institutional adoption and micro strategies, continued accumulation acting as the biggest supportive themes. Engagements on Bitcoin are running at over 177 million in the last 24 hours alone. That's a crowd paying attention. Now, here's where the geopolitical layer gets interesting, and you need to understand this to understand why the miners are decoupling from the broader equity market right now. The Strait of Hormuz remains under partial Iranian blockade. Iran continues to block most shipping traffic through what is the world's single most critical oil choke point. Around 20% of globally traded oil normally moves through that corridor. Brent crude is climbing overnight on Iran stalemate headlines, and stock futures are red as I record this. A peace, the peace talks in Islamabad collapsed after nobody showed up and nobody was sure who was going to show up. Vice President Vance, Special Envoy Steve Witkoff, and son-in-law Jared Kushner led the U.S. delegation. The Iranian delegation, led by Parliament Speaker Mohammad Bagher Ghalibaf, walked away, refusing to accept American demands that Iran had to abandon nuclear development. The 2 week ceasefire has expired yesterday, and now a new ceasefire is not recommended or expected. A second round of talks might be scheduled for Islamabad later this week, with Vance on the chair, ready to go whenever that becomes necessary. The trip has been postponed due to the fact that Iran informed the U.S. through Pakistani mediators that its team would not be traveling to Islamabad, and Tehran stated that there's no prospect for participation in the talks as long as the U.S. naval blockade on Iranian ports continues. Two naval U.S. warships have already transited the Strait of Hormuz for the first time since the conflict began. President Trump told reporters, quote, "We're sweeping the strait whether we make a deal or not. Makes no difference to me," end quote. That's the backdrop. Now, oil is the pressure valve. Equities are absorbing the geopolitical risk, but crypto miners are decoupled from the equity beta right now because the underlying asset, which is Bitcoin, is behaving independently and actually benefiting from the uncertainty. Lunar Crush is showing geopolitical Bitcoin adoption emerging as a real narrative theme, with Iran's reported acceptance of Bitcoin for oil payments gaining measurable social attention. That is exactly the kind of environment where miners like Riot get repriced upward on both the commodity trade and the speculation trade. The play here is straightforward. If Bitcoin continues pushing higher and dominance keeps gradually falling, Riot gets double leverage as both a miner and a speculative vehicle. The cheap options combined with the confirmed social surge give you a defined risk way to play that thesis without chasing the spot price on the equity itself. Now, what to watch? If Bitcoin reverses sharply or dominance spikes back above 61%, this setup loses its foundation. If IV rank climbs above 10%, the options advantage evaporates. And if the Iran situation resolves overnight with a surprise deal and oil collapses, expect the geopolitical premium to bleed out of the miners right along with it. Now, right now, none of those conditions are present, but the signal is live. Let's move to the supporting signals ranked by alpha potential. Number one is CXAI, the stock ticker. It's trading at 18 cents. Greed score of 0.475. Z-score 12.3, the second highest reading in today's data set. Momentum is confirmed, sentiment plus 5.6, solidly bullish. The catalyst is real. A Google Cloud director publicly endorsed CXAI's API first data layer approach and AI powered conversational analytics as a differentiated enterprise solution. That's not a paid promotion. That's a organic validation from a big tech insider. When a Z-score hits 12 and you have a named endorsement from Google Cloud infrastructure leadership, you're watching discovery signal in real time. 18 cents is penny stock territory, so position sizing matters, but the convergence here is clean. Now, number two is IBIT, stock ticker trading at $44.75. Agreed score 0.475. Z score 10.1 with confirmed momentum. Sentiment plus 0.47. The catalyst is indirect but powerful. Positive sentiment around Bitcoin rally is bleeding into Bitcoin linked ETF sentiment. So IBIT is BlackRock's Bitcoin ETF. It's not a miner, it's a wrapper around the actual asset. So when Bitcoin moves and social attention spikes, IBIT captures the halo effect without the operational risk of a mining business. A Z score of 10 means attention is extreme. The sentiment score shows the crowd is leaning bullish without tipping into irrational territory. This is a cleaner way to play Bitcoin exposure than spot if you want equity market liquidity, and no wallet risk. And with sentiment on Bitcoin itself running at 80% bullish, according to Lunar Crush, the wrapper benefits by proxy. Now, number 3 is MARA, M-A-R-A, Marathon Digital, a mid-cap equity trading at $11.84. A greed score of 0.462, Z-score 5.6, momentum confirmed, sentiment just on the positive side at plus 0.09. Short interest sitting at 38% afloat, which puts us in a legitimate squeeze territory. The IV rank is 3%, meaning that options are pretty cheap here as well. The catalyst data shows insufficient content to determine a specific news-driven sentiment read, which means this is a technical and options flow setup, not a headline-driven one. MARA is another Bitcoin miner, so it shares the same microdriver as Riot, falling Bitcoin dominance and rising Bitcoin spot price. The key difference is the short interest profile. 38% short float on a miner that is already catching a bid in a rising Bitcoin tape is a structural setup that can accelerate quickly if the squeeze mechanics start firing. Pair that with cheap options, and you have a similar asymmetric profile to Riot, just with more short covering fuel underneath it. Now, I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.